Hi, welcome to the Market Alert for Thursday the 7th of July 2016. So yesterday the market was sideways for a large part of the pre-market session after moving higher initially and then coming back 100 points and then trading sideways. The first signal of the day was 5 minutes before the high impact ISM manufacturing figures, which came out worse than forecast, but it didn't stop the market from being pumped up first and then moving lower thereafter. Eventually the market started to move higher. As I've said before, they don't want this market going down just yet, so they're doing the damnedest to bring it back up, and we get a buy signal at 10 minutes past 4. The market trades sideways for a while before driving through, and that is the key then to start actually trailing the stop when you get the market driving through the scalp level and the psychological level, and then using the lower highs to tuck the stop underneath. This resulting in a 36 point profit, and then the market trading sideways waiting for the FOMC minutes, which as I said yesterday, we weren't going to get anything spectacular. And the result in the market was exactly the same as well, which is why I sent out an email to say I was calling it a day, as the market was going nowhere. This is the 7 o'clock bar, and then the market just sideways there. So calling it a day was the right thing to do there. There was another buy signal that went on to make 20 points, but to be honest with you, it was so sideways. And this is something else that I've noticed now. I mean, from 2008 all the way through to more or less the earlier part of last year, the market would react with a lot of volatility when Yellen spoke. Now the market has got used to it, and that's an important thing to be aware of, because the rhetoric and what they're actually doing is not being taken seriously anymore. As you can see there, the market just didn't know what to do with the information that was presented, which indicates again that the Federal Reserve are running out of tools to actually keep this Ponzi scheme alive. In the daily chart, you can see how the market was brought back yesterday, and again the volume not all that great. Again, prices being marked up, and also today's overnight, or the overnight session there, you can see starting to move back to the upside. And like I say, they're determined to bring this market back up to the highs before the whole thing comes falling down, thanks to Deutsche Bank, which again, keep an eye on this, and also watch carefully. Should the share price of Deutsche Bank break 10 euros, then I think you'll start to see some panic in the banking sector then. News-wise, today we've got ECB monetary policy meeting accounts at 12:30, but really the only one to be concerned about during the Dow session is the crude oil inventories, which I mentioned yesterday because of the holiday on Monday, have been postponed until we get to Thursday. They're always one day behind when we have a holiday in the US. On the implied volatility front, we've got another drop in this, 11.98, back below the 12. This again is seen in the chart here, and the implied volatility moving back down towards that magical 10% area, where we will get a reaction from the underlying market in the next couple of weeks, if not sooner. Like I say, it all depends on whether Deutsche Bank can hold above the 10 euro level. So again, very important to keep an eye on that one. So that's it for this morning. Not a lot else to report, apart from, like I say, watch the Italian banks, the Deutsche Bank, as there's major funding problems out there for these two. Right, that's it. See you in tomorrow's. Thanks for watching.